In this video, we are going to see why commodity trading firms don't scale. Why, when the company hit a certain size, they just coast until they shut down. Why is that? Is it on purpose? Is it because of the competition of the market? Is it due to the lack of skills of the founders? Or is it just because commodity trading is too difficult? Those are the questions that I've been trying to answer for years. If you've been following my YouTube channels, you know that I have a few commodity trading firms. And as you can imagine, I spend a lot of time thinking about how to grow my companies, speaking with my peers on what they see on the market, what they think about the topics, and so on. So if you want a summary of years of reflection, of experimentation, stick to the end of this video. All right, let's jump in. At the beginning of my career, I worked at TotalEnergies at their trading entity aside from university. And at the time, TotalEnergies was called Total. And for the people that don't know, this is a big French oil producer. Then when I graduated, I got a job in a small commodity trading firm called Getty Trade. And frankly, coming from a massive oil producer to a niche commodity trading firm was quite a shock. Especially that shortly after I arrived, the company went through a heavy restructuring and we ended up only 3 people. So you can imagine how I felt. So there were my boss, the owner of the company, the accountant, she was also family related to my boss, and me. And when I left the company after 6 to 7 years there, we were like 12-ish people. So I really had the chance to see all the steps, all the milestones, all the challenges to grow a company to that size. My boss back then, she had been running a commodity trading firm for 30 years. And funny enough, my boss' mother also ran a trading company back in the 50s. So, I mean, she was no noob. She knew what she had to do. And that was a fantastic moment. I mean, she could speak 5 languages, I think. French, English, German, Polish, and some type of Indian also. I really learned everything from her, and I still deeply love that woman. I remember she used to do something that I thought was completely ludicrous. Every night, she read all the emails that came in or out of the company. She obviously had access to all the email boxes, and she read all of them. And one day I was speaking with her and I said something like, Vanessa, it's normal that the company cannot grow. You are the bottleneck. For God's sakes, you read all the emails. You don't have 40 hours in a day. And then I clearly remember that she looked at me right in the eyes like I was a complete moron. And she said, Damien, but it's my risk. And at the time, to be honest, I didn't really understood what she meant, you know. I was a 20-something shithead. But now, I do understand. And I think this is a core reason why niche commodity trading firms don't scale. And for you to also understand this, you need to understand the position of the business owner of a niche commodity trading firm. Imagine this. You've been working days and nights to make your company successful. It's been 5 years. You dodged all the lethal bullets and you finally have a somewhat viable business. It's finally working. At the end of the year, you could pocket, if you want to, 1 to 2 million of US dollar. You have a team of solid 5 to 10 people. You have recurring contracts. You are well known in your market niche. You survived market volatility, payment default, claims, crooks. You found a way to get finance. Now you have operation that work. You basically mitigated all the main risks and you make decent money. You are good. But now let's see what are the challenges that you are going to face if you want to grow your company to the next level. First of all, you will need more money to finance your trade. And this is a cold reality. In commodity trading, it's almost impossible to self-finance a quick expansion. And the math is very simple to understand. Let's say your margin is 7% per trade and your cash cycle is 30 days between when you buy and when you get paid. So you will need to perfectly execute 11 trades to make 100% on that money. A year of perfect execution. If you redo the same calculation with a 3% margin, you will need 23 perfectly executed trades to make 100%. So based on that fact alone, you can easily understand why you need to borrow money to grow faster. But when you will want to expand, to open new trade flows, you won't get access to those cheap credit lines, and you will have to accept more expensive credit lines. And this may not be good enough for the market you are in. For instance, if you need to borrow at 14% per annum from a specialized fund, but your competitors on the same trade flow have a cost of money of 5%, you are at a steep disadvantage. To grow your company beyond your niche market, you will have to find, build, develop new trade flows, open new markets in a geography that you probably don't know as well as yours now. This will require the owner to travel at least for 3 years heavily there. Maybe he will probably have to relocate there for a while with his family and so on. And by the way, we'll see later in the video why you cannot have an employee to open those new markets. So stick to the end. But imagine the position of the business owner. You just work your ass to make this company successful. I mean, worked 80 hours a week for 5 years, and now that you are making decent money, a few million a year is cool money. You need to tell to your spouse, to your family, to your friends, to your children, or whatever, that, hey guys, we are going to live in a new continent now. Yeah? And honestly, if this is a destination for commodity, it's probably not going to be like a cool city to live here. You're probably going to end up in a second tier city next to an industrial zone or next to a port. Yeah, man, tough conversation to have. And when you open a new market, you will have to invest a lot of money in that market before you see any return on investment. And maybe if you don't succeed, you will just have to burn those money. So this is quite a big risk that you will have to take as a business owner, because you won't be able to know all the ins and outs of this new trade flow or this new geography without doing it. So you can analyze whatever you want in advance to optimize your chance of success, but honestly, there is a lot of things that you just discover when you do it. For instance, regulation. Okay, you can read the law, you can check the tax level, you can do whatever you want. But depending on the country, you could have a big gap between what the regulation says and what people do. And let me tell you a little story about it. So I used to have a company in Senegal, West Africa. We were basically an importer and distributor of cooking oils. So we started a few shipments, and then I saw that, man, it was very, very difficult to have a positive margin, and it doesn't really make sense because I know the price for our competition because I spoke with their supplier and they show me the contract, so I know it, and I see the price that they are selling right now. So why would they lose money? I mean, there's something that I really not understand. And then my business partner, he was not the brightest. He ended up stealing all the company money, but anyway. So then my business partner told me, like, look, Damien, it's normal because they don't pay the same level of taxes as us. I was like, what? Yes, when they import, they have a flat tax. And it's only now that you are telling me this. And what happened is, like, I don't know if this is still the case now in Senegal. Back then, the big importers, they were able to pay in advance their import taxes, like putting few millions in the government treasury, so paying few millions in advance for the years of import, and so they could basically have a better tax rate on the import. And I was like, what? So we are anyway, and then the guy explained to me like all the other tricks that they do to pay less taxes. So yeah, anyway, expensive learning. And for instance, another thing that you need to know is, like, in a lot of countries when you import goods, there's like different tax level. And for instance, in some countries, people mislabel or misdeclare the good inside the container, so then they can be taxed at a lower bracket. So let me give you an example that won't incriminate me. Yeah, just joking. For instance, in some countries, if you import wheat flour, it's low taxed as it's considered primary food. But if you import another type of flour, then you will have to pay a higher tax bracket. So what the importer do, they misdeclare the type of flour so that they can pay lower taxes. So then if you want to go compete in those markets, you need to be okay with doing it. Are you okay to cheat the government there or not? And you need to know that before you invest time and money in at the destination, otherwise, man, you Another really big problem also when you open a new market is brand recognition. For example, if you take my example, when I worked at Getty Trade, I was in charge of developing the West African market. And we were a small trading firm back then, and nobody knew about Katie Trade in the West African market. We were very well known in other parts of the world, but not there. So for me, it was very difficult to compete against the people that was already known by the big players. And I remember that for me, it was extremely difficult to break into the big companies. Like there were like few very large importer or few large factories, and even just to get a meeting with the right people, it will take months, a lot of follow-up. It was very, very difficult. And one of the reasons is like they did not know our company. In front of us, we had companies such as Olam, Louis Dreyfus Commodities, multi-billion-dollar company that was extremely well-known, and the other big players preferred to work with those big players, even though I could like sell at a cheaper price than them for a better quality. And I knew that because I knew everything about that market. And I knew where they bought, I knew at the price that they bought, I knew at the price that they sold. I knew everything. So we could be competitive. But as we had no brand recognition, it was extremely slow, extremely difficult to break in and be recognized as a true supplier. Finally, my last point about opening a new market, opening a new trade flow, is that often the company started in their original market with an unfair advantage. And this unfair advantage was used as a wage to then expand their activity. For instance, if you have watched my conversation with Mark, he went into the peanut market in Venezuela because his family had years of relationship with all the farmers. He used this as a wedge to grow. And when you enter in a new market, in a new origin, in a new product, it's definitely harder to find, to get, to build an unfair advantage. Alright, teams, so I've made a lot of mistakes about our employees, my business partners, and so on. I have a lot of things to say. I mean, I had one business partner that stole all the company money from me. And you can imagine one of my friends back then invested money in that company. So, you can imagine what it's like when you need to call your friend to tell you that the business partner that you said only good things about him just stole the money. So tough time. In one of my other company, we had like 5 employees and we fired all of them. And just to give you like a little taste of the quality of those employees, obviously it's my mistakes. But it's just funny to say, look, one of the employees just smoked weed like every day, and we said, man, you've got to stop if you want to work with us. He said no. Another girl, like she smoked crack. From what I understood, she was not addict, but she did smoke crack once. What the f? She was nice actually, and she was not that bad actually, but still. Another girl was like a OnlyFans girl. Come on. She probably make more money than me, so I was like, man, why do you want to work there? It makes no sense. Yeah, a lot of stories about that. Anyway, but to grow your company, you will have to hire a bunch of people to do a bunch of different jobs. But there is one job that is extremely difficult to hire for. It's the trader's role. And by the way, the role of a trader at his core is to, thanks to his judgment, market knowledge, counterparty knowledge, experience, network, the trader should be able to close deal while assessing properly the risk of those deals. And the people that can do that effectively, like the senior one, the more experienced trader, they are probably too expensive for a small commodity trading firm. And not only in terms of salary, but also in terms of the type of deal that they can bring to the company. Because probably there is a chance that the company cannot bear the risk, the inherent risk of those big deals, and also cannot finance those big deals. So it's a big issue for a small trading company, because if you hire a very expensive trader, first of all, maybe it will not work. So you will have to pay a huge salary like in the wind. And after 6 months, a year, then you've lost all that money and the guy just leave. Secondly is maybe he is good because he works in that big company and he has all the network and all the knowledge, all the tools of that company that makes him a great trader. So there is always this risk that it won't work at your firm. And also you need to ask yourself the questions like, why, if this guy is very successful, why does he want to work in your small company? Anyway, I have a lot of things to say about that, but that's maybe for another video. All right, so what a small commodity trading firm is probably going to do is to hire sales trader, like junior or young sales trader that is going to be mostly focused on selling and finding new buyers. But it's extremely difficult to make them successful because there's something that you need to understand. As the founder doesn't have the judgment to assess the risk of all the new markets that the team is going to be developing, the business owner will put barriers, risk limits, and so on, which will make the universe of possible deals very, very small. So let's say that this is the whole universe of deals possible. But as the business owner doesn't know this geography well, he's going to put extremely tight risk limits. So maybe only the deals in this little circle is possible in terms of risk. But as you have junior traders, junior employee, probably they don't have the experience to take one deal outside the risk limit and put it inside the risk limit. It's very difficult. You need years of experience to do so. So it's a difficult situation to be in, and I know a lot of companies that are in this situation, and there's going to be probably two outcomes. First one is like the junior guy is like, that company, it's been a year, I cannot make a deal, it's impossible to do deal, the owner doesn't want to take risk, I cannot do deals without taking risk, blah, 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 like loser mindset, and he's going to leave. Then the other outcome is that the business owner is going to be, look dude, man, it's been 6 months, you haven't done jack. So I'm sorry, I'm gonna have to let you go. Even though he was like set up to fail from the business owner. So yeah, that's the most likely outcome. For instance, Luis, another business owner that accepted to come on the channel, actually explained how he took 3,000 euro and built a 60 million in revenue trading firm. Luis told me that he has one other guy who could lead the sales beside him, but that employee had to be trained for years. So you can see there is like one narrow path of success, but it's definitely tough to nail it. And actually, I experienced this situation of having very tight risk limit. When I was at GetItTrade, I was in charge of developing the West African market. And here, that was the same situation. My boss, she didn't really know the market that well. I think she had like one deal 10 years ago where she got like scammed or something like this. So she had like, let's say, not a good a priori. All right, so I had to develop those markets, but she had like one rule. I'm sure it's not like that anymore in the company, so I can speak about that. She had one rule, and that was, look, I'm okay to give credit to the buyer, and usually the buyer, they are insured by a credit insurance. So, the risk is not that high to give them credit. She said, I'm okay to give credit, but for the first shipment, they need to prepaid. So man, I can tell you, that was so difficult to make it happen, because I met a lot of importers and they were like, okay, give me a price, I know the quality, whatever, and I'll buy from you a couple of containers, no problem. And then I was like, yeah, okay, but as the first one, you need to prepay 30%, and man, that was really, really difficult to make it so, especially that what you need to understand is in this part of the world, the seller is really the bank for the buyers, for the importers. So everyone gets credit, and basically this is how the importer works. They just maximize their credit line or their credit insurance from all the suppliers, and this is how they run their business. So for them, asking for prepayment for something that they can get with credit from another guy that they know, it's a tough ask. But you know what? I complained, I cried, I was like a baby, yeah, I cannot do it, blah, blah, blah. But turned out, I made it happen. So yeah, man, everything is possible. All right, my last point of why commodity trading firms don't scale is about capital requirement. So this video is already quite long, so I'm going to be brief on that point. If a company wants to grow beyond its local market, at a certain point, they will need to have like an equity partner, someone that will come with 10 million, 20 million to put meaningful amount of equity in the company to help the company grow, attack all the new market, get better credit line, and so on. So at some point, you will need to find this fresh equity, this investor. But the problem is like there is like a duality that is not going to be easy to overcome. First of all, what is the price of the company? What is the value of the company? There are some metrics, but commodity trading is a very low margin business. Usually investor, they don't like that, so they're like, what is this business? Maybe they're right anyway. So it's going to be quite tough to find like the right price for the company, especially like as a business owner. You've been building this company for 5-10 years. It's been extremely difficult, and now you maybe think that the company worth more than what people are willing to offer. So there is one issue with the price, but the biggest issue, I think, it's like really two different mentalities. Like the guy that built his company from the ground up. Now, let's say you want someone to put 20 million in his company, but these 20 million are going to come with some ties, with less freedom. So basically the guy now, he has somewhat a boss. He has other people that he needs to be accountable for. I don't think when you are an entrepreneur and you made it in commodity trading, you are ruthless because it's a tough industry. But I don't know if this mentality works well with, okay, now I have investor, I have to give them a weekly update on the business. We have like a board now, so the guy cannot do what he wants. I'm not sure that the mentality of our founders goes well with the one of an investor. But you have to go to that path at a certain point if you really want to make your company global. So to sum up, trade flow, trade finance, team, capital, I mean, all of that are challenges that you need to overcome if you want to go to the next step. And knowing that you are already good now you're making good money, so would you really want to take on all those challenges, increase the complexity of your business, increase the risk of your business? Because honestly, for each new people that you add, each new deals that you do, there is a lot of inherent risk that is just happening. There is a lot of inherent risk that you're just taking on. I mean, anything will happen. Like your team forgot to declare VAT on dark cargo, someone screwed up with the hedging, you are losing a massive amount of money. There is another guy that one of the traders that bribed someone at destination, and now it's it backlashed on you. It's like you are the company that bribed people. You're like, what the f? I've never agreed on that. So many things could go wrong. So for you to grow, you will have to add people to control what other people do. So that means that there is another layer of control that needs to be added to the company. So it's going to be extremely costly. You will need to hire clever people. And there's like basically a layer of people that are not going to produce anything. They are just going to make sure that nothing like blow up. And so that means that your cost balloon, your team size balloon, but not your profitability, and probably you are going to lose money for a few years. It's a big bet for a owner, a founder to say, look, I'm going to take the next 5 to 10 years, all these new people, all this new complexity, all this new risk to build something incredible down the line. So it's basically getting more expensive to grow for extremely low to no rentability for years. So is it what you want to do? I don't know. So commodity trading firm is very difficult to scale. From a local player to a global titan, it's not a valley of death that you need to cross, it's a continent of despair. Alright, so that's it for me today. I hope that you liked the video, and if you want to break into the world of commodity trading, just check the first link below this video. Ciao!